Next question, the biggest risks to the equity market. What do you think, Druckenmiller? The takeaway of this section, the biggest risk is if rising inflation forces the US Federal Reserve to raise interest rates, which is one of the things we've been, some of us have been talking about. I haven't actually done a lot of videos on this yet. But yeah, I think the Fed consistently is saying, we will not for another 2 or 3 or 4 years. We promise you, kind of thing. But it doesn't seem like that's going to be able to continue. So let's see what Druckenmiller says. Without a doubt, inflation strong enough that the Fed responds to it is the biggest risk to the equity market. No doubt about it. This bubble has gone long enough and it's extended enough that the minute they start tightening, the equity market should go down a lot. Particularly with so much of the cap weighted in growth stocks, which would be hit the worst. And our central case is that inflation occurs, but we're open-minded to something like 0708 when you never really got to the inflation because the bubble popped. So inflation never got to the manifestation stage. The second one in terms of geopolitical stuff, I'm worried about Taiwan. You guys know I've mentioned that actually a bunch of times, to the chagrin of some people actually, but yeah, and we were talking about it in our AMD and our semiconductor series recently, going on over the last week or so, looking at, NVIDIA, Intel, AMD, and stuff like that. AMD partners with Taiwan Semiconductor. Taiwan Semiconductor is, I think, the biggest foundry semiconductor producer in the world. And we got to talking in the comments section about Taiwan. If you're unfamiliar with the situation, basically Taiwan is its own beautiful little island country, and the leaders of China basically were about to be overthrown. I think, correct me if I'm wrong, but they were about to be overthrown, and they fled to Taiwan and then said, okay, we're our own country now. China's government became communist, and China still says, no, Taiwan obviously is part of China, but Taiwan and a lot of the rest of the world says, no, we're our own thing. Trump kind of was like, Donald Trump, was a little bit revolutionary in the way he approached things because he didn't care about what China thought. And he would be like, yeah, Taiwan's our buddy, Taiwan's our partner. And, in brackets saying like, which is different from China. And that pissed a lot of people off, particularly China. And yeah, so who knows what's happening with Taiwan. And China is kind of always posturing against Taiwan, more and more aggressive kind of. I think even I read an article recently that was saying there have been like Chinese planes flying above Taiwan and stuff like that, which is like not really okay, because they're not homies and stuff like that. So, but it sounds like Trump and Japan and numerous other countries are like, hey, we have your back, Taiwan. I'm not sure what Biden's stance is on it, but I wouldn't be surprised if it is supportive of Taiwan. Let me know in the comments if you know more about that. So back to Druckenmiller. He says, I am most worried about Taiwan. I think it's probably not a worry until after the Beijing Winter Olympics in 2022, obviously, because China wouldn't want to start a war before welcoming the entire world. I don't think Xi Jinping wants to deal with sanctions and boycotts. This is not some little thing where Yemen is fighting in Saudi Arabia, is fighting Saudi Arabia. If you were to get worried about the United States and China, that could be an exogenous event that could get nasty. That's our central case. But as you know, I tend to change my mind. So he's saying the threat of, and going back to what I was saying about, I'm not sure about Biden's kind of standpoint on Taiwan. The general kind of feeling I get is that Japan and the US are like, Taiwan, we have your back. Yeah. And so if China starts to make moves against Taiwan, it could be the beginning of World War III type thing, is what people are saying. On long-term effects of retail trading in WallStreetBets, Druckenmiller, what do you think about this? So the takeaway, the kind of long and short of this blurb, retail traders will remain a force, but with investments in less radioactive names than GameStop. So he's saying, when I started in the business in the mid-1970s, retail dominated institutions. You got most of your information from brokers, which is fascinating to imagine. The amazing thing for current retail investors is that they have access to things like Toggle, So they're actually much better informed than the retail investors were in the late 80s and early 90s. And with Toggle is like a really powerful tool to help you research stocks and give you different tidbits of information that you wouldn't find. And with the internet, we have tools and ways to congregate. The big risk is retail is all loaded up in this stuff. Don't confuse a genius with a bull market. Retail investors could lose enough money that they're scarred. And I totally agree with him on that. I've mentioned that so many times in the videos. And I think most people, especially young investors, new investors, who kicked ass basically automatically last year because it was easy to make money last year. I'm like, dude, if you get burned too hard, you're going to be too scarred to ever get back into the markets again. So, keep cash on hand. So dollar cost average. So don't YOLO your life savings on, GameStop and stuff like that. So, good to know that Druckenmiller and I think the same way in that. He says, I always thought the Japanese investors would come back to the market in 5 to 10 years after the Japanese asset bubble burst. That was 1990 and they still haven't come back. Actually, I was talking about that a few minutes ago, saying that was way bigger than what we're having now in Western markets. So I worry, but I think my guess is the after effect of WallStreetBets is here to stay, and they'll probably migrate away from some of the more radioactive names like GameStop. But I think it'll actually end up being some core healthy information moving through the sharing network. It's fascinating if you think about it. Even just Reddit, let alone a lot of these chat discords and groups like that. There's never really been a way where you could get millions of coordinated retail investors who, some of them are just working at 7-Eleven, living in their parents' basement kind of thing, but some of them are legit millionaires. It's never been possible to coordinate them to all orchestrate something like what we're seeing with GameStop or AMC or anything like that. And that's never happened before. So I think some of these tools are going to definitely make an impact on the market going forward. And I think that's kind of what Druckenmiller is telling us. This one's kind of interesting too. He's talking about Toggle, what I mentioned earlier, that tool that people use to research research stocks, on how Toggle or other investing tools could have been used in the 1980s. The takeaway of this blurb: Druckenmiller believes in having a multidisciplinary approach to investing. A product like Toggle, which creates financial analytical tools for hedge funds and retail alike, is another useful tool for an investor to have in the toolkit. He goes on to talk about how when I started in the business, Fed watching was considered unique. I used Ned Davis research and other technical services. I felt I had a huge advantage over the general public. And he goes on to say, just having a little tool like that gave you such a big advantage over people, let alone, talking to insiders or stuff like that. But now Toggle, who's available to everybody, gives you so much more information than even the greatest in the world in the 80s. So that makes things really interesting and probably more complicated for investors to figure out. Druckenmiller, what do you think about making concentrated high conviction bets? He says the best investors, e.g. Warren Buffett, Carl Icahn, George Soros, make concentrated bets in high conviction plays. They don't practice the business school teaching of diversification. So he goes on to follow up on that. All of these guys make large concentrated bets where they have a lot of conviction. They're not buying 35 or 40 names and diversifying. I don't know whether you remember that Icahn a few years ago put $5 billion into Apple. I don't think he was worth more than $10 billion when he did that. In 1992, when I went in to tell Soros that I was going to short a 100% of the fund in the British pound against the Deutschmark, he looked at me with great disdain. He thought the story was good enough that I should be doing 200% because it was sort of a once in a generation opportunity. So these investors concentrate their holdings. This is very counterintuitive. In my thinking, concentrating your bets decreases your overall risk because where you tend to be in trouble is if you have 35 or 40 names. If you start paying attention to one, if you have a big massive position, it has your attention. My favorite quote of all time is maybe Mark Twain. Put all your eggs in one basket and watch the basket carefully. I tend to think that's what great investors do, which is fascinating because a lot of the like trendy, you know, and like we were talking about Meet Kevin earlier. I think he says try to have 30 or 40 stocks, which is fascinating, you know. And I mentioned earlier also that I think I probably have about that many, including a bunch of funds and a bunch of like really passive stuff. But what do you guys think? How many do you hold, or how many do you feel comfortable holding? I want to try and take Druckenmiller's advice a little bit more to heart and maybe apply that more to some of my more high conviction holdings, you know, like Nokia, Palantir, AMD, and stuff like that. What do you guys think?